Let's speak about electric vehicle stocks and the climate bill. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today there is quite a few things I would like to speak about. And with that being said, it will all be timestamped down below in case there are particular parts of this video you want to go ahead and watch, because we're going to be going through these two articles. Speaking about the climate bill, this is one that sent Chargepoint up on news. It sent a lot of other companies up. The most dramatic thing in it is a $7,500 EV tax credit. We're going to speak about the kind of companies who will benefit from this, who won't benefit from it, and we're going to be taking a look at some of the latest EV, battery, metal kind of trends that are going on in the world as of right now, okay? And then after that is said and done, after we take a look at this important long-term news for the large majority of electric vehicle stocks, we're going to take a look at the charts for Tesla, Chargepoint, Nio, Lucid, Workhorse, and Rivian, just again to get an idea of how certain electric vehicle stocks have been performing, particularly since 2022 start, and then a little bit since June. There has been a lot of nice moves in the industry, so we're just going to take these 6 to look at, a large different variety. Some have some interesting things happening, and that's what we're going to be doing today, baby. Really quickly, could I ask you, hit that juicy like button, drop me a comment down below, let me know if there's any other EV stocks you'd like me to take a look at and make a video on relatively soon, and please, my friend, subscribe if you're new around here. So to start it off, we're going to be speaking about the $430 billion Inflation Reduction Act passed by Congress, and it includes new rules governing the electric vehicle industry. Now, spoke about this relatively recently on the channel in regards to how it affected ChargePoint and other charging companies, but it's going to affect pretty much every automaker that is out there right now. And as I just said, the most dramatic for a lot of these companies is that the current $7,500 EV tax credit will be replaced by incentives designed to bring more battery and EV manufacturing into the US. So this is going to positively affect some companies and negatively affect others, depending on where they do an awful lot of their manufacturing. Crucially, electric vehicles assembled outside of North America will not qualify for the EV tax credit. By some estimates, that's about 70% of the current EV and plug-in hybrid market. I saw quite a few traditional automakers quite upset about this. Kia, Audi, Porsche, they're not going to qualify for the tax credit anymore, so, they're not too happy. The cap to qualify, again, is $55,000 for sedans and $80,000 for SUVs and trucks. So, again, that means that some of the higher EVs, some of the ones from Tesla and Lucid, Fisker, a lot of companies, aren't going to qualify whatsoever. So that is just, for your standard vehicles, your family-owned vehicles. But the upside may be clearer for commercial electric truck makers, with the proposed incentives of up to $40,000 per vehicle, providing strong motivation for fleets to look towards certain companies, one of them being Workhorse. I had a few people ask me my thoughts on this one, and others as fleet options. The tax credit for commercial fuel cell vehicles is set at 30% of the price, or $40,000, whichever is lower. So a huge incentive, again, for any fleet operators. One of the first CEOs from the electric vehicle industry to weigh in on this was Rivian's CEO. He says, I think with regards to the Inflation Reduction Act, this is, as I commented earlier, this is a really important step, and I think it's great for the acceleration of electrification and really providing a path to a carbon neutral economy. In terms of what that represents for us, it's certainly a powerful tailwind. The incentives are quite strong. The consumer-facing incentives at $40,000. It's huge. We see this as really helping to drive a rapid transition to electric vehicles in the commercial space. So again, this here is going to help out a lot of companies and hopefully help out a lot of us as investors. And this isn't just affecting the big guys, it's affecting everybody from the very bottom to the top. So these tax credits, could be absolutely juicy. And who knows, it's kind of rewarding people who are going in-house in the US. So we'll see if this does end up changing any companies' plans going forwards. More than likely not going to change where companies are setting up their factories to an extent. I don't think it's going to have the biggest impact for most. Everywhere has their ups and downs. Now, the next thing, some of the latest EV battery and EV metal miner trends. I'm just going to go through some of the ones that I personally thought were important. Despite EV supply chain disruptions, plug-in EV sales remain strong, gaining significant market share in a weak conventional auto market. If you look at the actual global plug-in electric car sales reported so far in 2022, the year-over-year gain, the numbers are huge. The market share is showing a clear upward trend in general. But the year-over-year numbers still are huge. Of course, they would be even bigger if it wasn't for some of these, issues happening down the supply chain. But all in all, still huge growth across the board. There's growing waiting lists and higher EV prices. I mean, we see this everywhere. Unofficial site, the Tesla Cybertruck reservation track is up huge. BYD up huge. Ford numbers up huge. We've seen Lucid numbers go up huge. We've seen it all across the board. Even Chargepoint, we've seen charging points go up huge. Lithium-ion battery prices are increasing after declining over the past decade. So again, this can be positive and negative depending on what way you are investing, but needs to be noted. OEMs and battery manufacturers are increasing charging speeds using improved batteries and faster charging infrastructure. Of course, but still needs to be brought up. They mentioned here in July, Nio Power Day 2022, new 500 kW fast chargers coming to China and the EU this year. Lithium supply struggles to meet surging demand, resulting in high lithium prices with no price collapse in sight. I mean, this again is probably not going to be great for the actual consumers as of right now. Every company is dealing with this. It is leading to struggles, but it's something that is going to come down at some stage of life. Big oil and auto OEMs are finally moving towards achieving secure supply of critical materials, especially lithium. So again, a huge emphasis on lithium as of this moment in time, because it has to be. It's one of the biggest, constricting factors in the market as of this moment in time. I'm interested to see if this will lead to, again, more in-house things happening in the US. Now, I want to take a look at just some of the charts, some of the general trends. I think we all know that, the market a lot of the time does have general trends. Tesla, also always tends to move the EV market. But when we look at a lot of the charts, we're going to see really similar things. Tesla down, then up. Chargepoint down, then up. Nio down, up's coming down a little bit. If we compare the likes of Lucid and Workhorse here, we'll see heavy consolidation. Rivian, the exact same. There are general trends happening here. But the fact that some of the charts are showing us these upward moves shows that news is moving companies again. Tesla got the split announcement and sees a huge upward move. I mean, if we go back to the lows of May at $626, hitting the low 900s right now, huge moves. What do I think about Tesla currently? I mean, it's still a very good chart. It still is undoubtedly a very good chart, and I think this split is going to help them ultimately. Usually though, with stock splits, we see a run up in price like this. The split will happen. We'll see a sell-off before things regulate, and then we see a normal healthy movement again. Me personally, I wouldn't be looking to buy at these prices. You can see there was a brief period of a couple of weeks worth of consolidation here, right at the levels we're at now before a sell-off. I think we could see upward move into the split. Slight sell-off, slight pullback. Maybe it comes down $100 or so. We'll have to wait and see. Maybe even a little bit more. But yeah, I think we're going to see some some of that juicy Tesla volatility that we are all used to. Chargepoint has been doing some really interesting things price action wise, and it's looking strong. I'm going to put it that way. So we had this clear downward trend for the longest time with Chargepoint. Only recently did they break it. The 3rd of August was the first day, and they have maintained above it. Not only that, they broke out above this area of what was previously support and then turned into a resistance of sorts. And they have managed to stay above it. You can see the breakout. It's a huge breakout above that 1762 mark. And we've maintained it for 2 days. I will be watching them closely. I want to see how they react when they do inevitably come back down to this 1760, 1750 range. Maybe just as quick as it goes up, we can see it come back down. But if we can stay above this diagonal line here for a considerable period of time, even if that means coming back down to the 14s or 15s, I think the long-term strength here is actually going to be quite nice. I really am liking the look of the chart. But again, worth pointing out on the daily chart, RSI is oversold without a doubt. And generally, Chargepoint doesn't maintain those levels for too long, and they are followed by sharp pullbacks. That's just historically speaking. So, maybe it's not all sunshine and rainbows just yet. It does look that way right now, but given the current market, I'm not going to get too excited too quickly. But there has been nothing really but positive news for this company. Earnings are out on the 30th, I believe it is. I thought they were last week. I got some bad information from Seek and Alphas, I think it was. But yeah, earnings the end of this month, so it'll be interesting to see what happens there. Now, Nio is just consolidating. This is probably the most boring Nio has ever been, since it's been on people's radars at the very least. Since we were $4, $5, $6 a share back here, June 2020. There's always been a little bit more movement than we've seen the last couple of months. But you can see we are really consolidating. Really are. We're in the lower areas of our range. It can't really seem to make up its mind. They've had a mixture of good and bad news. I don't see any reason for this to change. I don't see any reason for it to make a huge upward move or downward move anytime soon. Technicals aren't particularly exciting. You could make a line here if you really want to and say we could break out and then break 25. But just as easily, I could see them come back down to that 1660 mark. I wouldn't really have any interest in playing Nio for the short term right now until there really is some sort of direction. Overall, though, long term, I still love what they're doing. I still love their long term outlook, and they are performing well. So, yeah, that's Nio. Lucid, yet again, has been really, really, really boring. I mean, I know there's been some big days here and there, both upwards and downwards, but RSI is right down the middle. We are in this really considerable area of consolidation, and it can't make a move either side of it. Earnings weren't the best. The people weren't too happy with them. There was nothing groundbreaking in them, in all honesty. Nothing that would make me want to cry or jump out of my chair with excitement. But yeah, Lucid's just a bit boring right now, sadly. And again, technicals aren't saying much. You could realistically try play it in the realms of, you know, that $15, $50, $20 mark. There is a lot of nice money to be made there. But once it gets anywhere near either of these ranges, that's when a breakout upwards or downwards can happen. That's what makes it a little bit more risky. Because, you know, it's not always going to stay within these boundaries that it's set. And if you're trying to play, you know, really tight stop losses here, for example, at 20, you could have set it at 21, you get stopped out. If you had held a little bit longer, could have made $2 a share. But long term, I love it. I know Q2 was underwhelming to an awful lot of people. To me, yeah, underwhelming, not necessarily the right word, but it was fine. If it wasn't for the production outlook cuts yet again, it would have actually been overall a decent quarter. Right, Workhorse, a lot of people have been asking me about these guys lately. Guys, these are trading in an insane range yet again. I've heard a few people telling me a lot of money has been made trading Workhorse as of late. They have big moves on a daily basis right now. Back from the start of the year, pretty much you can see our trading range has been in the realms of 250 up to 410. Yes, there's been breakouts to the upside of 550. It's come all the way down to the really low twos, but it has held these levels quite strongly. And again, given where we are right now, given the fact it's kind of getting rejected, I wouldn't be surprised if we see a nice short to a 10-20% move. We didn't see markets react too strongly to this news coming out speaking about the $40,000 incentive on trucks and stuff. It didn't really move Workhorse too much, but yeah, there's not too much strength here just yet. They're still just chilling along. But they are more stable than they've been for a very long time. As of right now, if I was to play them at all, it would be a trade. And yeah, right now, I prefer the look of the downside. But if it was to come all the way back down here, I could see myself opening a short-term long position. And then Rivian is not one we generally cover on the channel very, very much. But again, you can see a similar thing to Workhorse. If we take the recent lows at right around $20 a share, to where we are right now, even if we go back to these little very short-term highs here at 54, a huge trading range. And this here, that $20 to where we are right now, near $40, I mean, that's a 100% upward move. I mean, these are not small moves. They are happening over a considerable period of time. But say if we go from here, the end of May, even to the middle of June, you could have played it from 24 up to 32, back down to 24. I mean, there's huge moves here. The charts don't look that crazy when I have it on the daily chart. But a lot of the market just seems to be in this place where it's just chilling, it's just going slow and steady. Stocks are generally trying to form an upward or a downward trend as of this moment in time, but there is a lot of consolidation in stocks of all sizes, huge market caps and small market caps. Rivian, I really don't know what to think as of this moment in time. I definitely do think that the climate bill will help them out considerably with this tax incentive, and they already have, you know, very established customers. But what does the market cap say for us? I mean, that market cap, is that justified yet? Could I justify buying down here just yet? I don't know. Will I see the highs of 180 anytime soon? Probably not anytime soon, but maybe one day. But all in all, the market is just missing a little something. The EV market is just missing a little bit of excitement. It's nowhere near what it was in 2020s. There are places to do that now if you want that same buzz, if you want those same huge swings. It's just not the EV market right now. But for a long-term investor, that can be one of the best things ever. For a long-term investor, you don't need that excitement. You don't need all of the manipulation. I mean, if we click on any of these charts, Rivian at 180, Workhorse we know was in the 40s briefly, Lucid all the way up there at those 60s compared to where we are now, Nio again. I mean, you can see the excitement, and you can see that if you get trapped in that excitement and you buy at the highs, that is when you're ultimately going to lose money. We are all better off now buying these companies for the long term than we were a year or 2 years ago. I think as a long-term investor, that really is what you need to look at. I mean, we even see it with Tesla, those highs that were made. there's considerable dips everywhere. So I think what I'm going to do a little bit more often now is make a video more like this, where I give a briefer explanation on a lot of the EV industry, keep you guys up to date with any news that comes out alongside these bills, alongside the greater EV market trends, things along those lines. And then just make the more individualized videos when some actual like big news happens or earnings are coming up, etc, etc. I think that's the plan. But anyway, guys, if you watch this video all the way till the end, you, my friend, are a true legend, and I really do appreciate you from the bottom of my heart. Your support means the world to me. If you did enjoy, please hit that juicy like button, drop me that comment down below, subscribe if you're new around here. Anyway, guys, I'm going to see you all for another video very, very soon. Peace.